All right, today we're talking about a real clash of titans in the data world, Micron versus Seagate. Chances are you're using their tech right now and don't even realize it. But here's the thing, they are making two totally different bets on where our digital future is headed.
And that really gets to the heart of what we're asking today. So in this massive data revolution, where do you put your money? Do you back the sprinter or the marathon runner? Keep that in your head as we dive in.
Okay, so let's meet our two contenders. First up, we've got Micron. We're calling them the sprinter. And that's because they're all about blistering speed, taking big risks for potentially huge leaps forward. Then, in the other corner, you've got Seagate, the marathon runner. They are all about endurance, massive capacity, and just that steady, relentless forward grind.
All right, so here's how we're going to break it all down. First, we'll look at their core tech. Then jump into the financials, see what they do with their cash, check out the opportunities and the risks, and then wrap it all up by helping you figure out, which race is yours.
Okay, let's kick things off. First up, two champions of data. Now, before we start tearing them apart and looking at the differences, it's really important to remember something. Both of these companies are absolute powerhouses. I mean, we're talking proven winners that have just crushed the broader tech market for the last 5 years. All right, on to Section 2. The brain versus the library. So what's the real fundamental difference between these two? Well, it all comes down to their core tech. And honestly, the best way to think about it is this simple analogy. One company builds the brain, and the other builds the library. And this is really where it all clicks into place. Micron, they make the brain. We're talking about that super fast temporary memory, the hot data your computer needs right now to do anything. It's unbelievably fast, but yeah, it's also pretty expensive. Now, Seagate, they build a library. These are the massive hard drives for all that cold data, the stuff that just needs to be stored safely and cheaply for, well, forever. For them, it's all about one thing, cheap, massive capacity. Okay, Section 3, volatility versus stability. Because you know what? That difference in technology, it creates two wildly different financial stories. One is a total roller coaster, pure volatility. And the other? It's all about stability.
And this chart, this is where you can literally see that sprinter versus marathon runner idea play out in the numbers. I mean, just look at Micron's revenue. It completely craters to $15.5 billion in 2023, but then it's expected to just rocket back up to over $37 billion by 2025. That is a massive, wild swing. Now look over at Seagate. Sure, they have cycles too, nobody's immune, but look how much steadier that recovery is. It's just so much more predictable.
And that volatility? It absolutely hammers their profits. You see, Micron has these gigantic factory costs, which means their net margins can swing from a crazy negative 37% all the way up to a positive 22%. But now, look at Seagate's green line. This is what's so amazing. Even at the absolute bottom of the cycle, they managed to keep their gross margins in the positive. That just tells you it's a much more resilient business model.
But you want to know the real acid test for stability? It's all about cash flow. And listen to this. In 2023, Micron just burned through a staggering $6.1 billion in cash. Meanwhile, during that same tough period, Seagate stayed cash flow positive. And that, right there, is the whole story. Seagate is a consistent cash machine, while Micron's cash, well, it can vanish and reappear depending on the cycle. Okay, moving on to Section 4, growth versus income. So you've got these two totally different cash situations. What do they actually do with the money? Well, this is where their strategies just completely split apart. One is all about growth, the other is all about income. And there you have it, plain and simple. Seagate is the cash cow. Their number one priority? It's the shareholder. They're actually expected to give back over 73% of their free cash in dividends, and they are constantly buying back stock. Then you have Micron, the compounder. Their priority is pure growth. Just about every single dollar they make gets plowed right back into the business to pay for these huge expansion projects, what we call Capex. And when I say massive, I mean seriously, massive. Just look at that number, $15.86 billion. That is what Micron is planning to spend in just 1 year. All of it on building the next generation of their factories. It's just an almost unimaginable amount of cash. So to put that number in perspective for you, that's 42% of their entire projected revenue for the year. It's like a gigantic, non-stop construction project. Now let's compare that to Seagate. They spend just 3% of their revenue on Capex. And that right there perfectly sums up the difference. Micron is asset heavy, they're always building the next big thing. Seagate is asset light. They're focused on squeezing every last drop of efficiency out of what they already have.
Right. Section 5, opportunities and risks. So we get the business models now, right? But what does all this actually mean if you're an investor? Let's dig into the bull case and the bear case for both of them.
The bull case for Micron? It's actually pretty straightforward. It's a pure bet on the AI revolution. I mean, AI is incredibly hungry for the kind of super high-speed memory that Micron specializes in. Now, for Seagate, the bull case is all about the unstoppable growth of what's called the data sphere. Think about it. All the data being created by AI, it has to be stored somewhere cheap, and that is a market that Seagate pretty much owns. But of course, the risks are just as obvious. For Micron, that massive $15.8 billion spending spree, well, that becomes a huge problem if AI demand doesn't live up to the hype and they end up with way too many factories. We saw exactly how bad the losses can get back in 2023. Seagate's biggest risk? It's debt. They have high leverage, they have negative equity, and in a world with high interest rates, that's a dangerous place to be. And that's not even mentioning the long-term threat that faster, cheaper SSDs could one day replace their classic hard drives.
Okay, Section 6, the final verdict. We've looked at the tech, the financials, the good, the bad, all of it. So it's time to bring it all together and ask that one big question. Which race is yours?
So let's just lay it all out on a simple scorecard. When it comes to growth potential, Micron is the clear winner. I mean, its revenue is on track to double, and it's got incredible financial health. We're talking a fortress balance sheet. But Seagate takes home the prize for stability, with that super consistent cash flow. And it definitely wins on income thanks to that juicy dividend.
So what does this all mean? It means it really just boils down to what kind of investor you are. Are you an aggressive growth hunter? Do you believe in the AI boom, and can you stomach some wild swings for a shot at massive gains? Then Micron is your sprinter. But if you're more of an income and value strategist, and you want that steady exposure to the data world plus a reliable dividend check, then Seagate is your marathon runner. You can really boil the whole thing down to this simple idea. Micron builds the brain, Seagate builds the memory bank. And the thing is, your portfolio might actually need both. They play two totally different but equally vital roles in the digital world we all live in. And that leaves us with just one final question for you to think about. When you look at your own goals, your own comfort with risk, which race are you really built for? Are you a sprinter or are you a marathon runner?